With me now, Andre Cilliers, TreasuryONE. Andre, let's get the lowdown on this volatile currency of ours. And of course, it's being buffered by data coming out of the US on a regular basis. Where do you see it going in the short term? I suppose that's really equivalent to asking you to get your crystal ball out and give us your best guess.
Best guess. Yes, good afternoon to everybody. Best guess would be that we're going to remain within a trading range this week and next week and for the very foreseeable future of 1450 to 1490. The Rand seems to be very happy in those parameters at the moment. And unless we see something dramatic of the FOMC, and we have their minutes coming out this week, we will remain within that range.
When you say dramatic, what would that scenario look like?
Well, good. If we analyze the FOMC and the minutes and the discussions and the press conferences by Mr. Powell over the last couple of weeks, then two things that they're saying. They're happy with inflation at the higher levels. They would prefer seeing further employment closer to full employment levels in the US, and they will continue with expansionary monetary policy for as long as it's necessary to see that full employment and to see robust growth in the economy. So something drastic would be a move away from that stance.
See tapering coming into the scenario, how dramatically?
Good. If they come out and they say that, as far as they're concerned, employment is sufficient at really good levels, they're happy and starting to get unhappy with inflation that doesn't look as transitory as that they initially thought, and that they need to move a lot quicker on their tapering, on buying back of liquidity out of the markets and increase interest rates. That would be the dramatic move if they were to bring interest rate increases forward from what they anticipate as end of 2023, most probably into late 22, early 23. That would be very dramatic. It would cause a major move in the dollar. We would see the dollar index jump significantly to higher levels, and that would weaken the Rand considerably, and we will breach the 15 levels.
Go beyond quite dramatically the 15, but we.
If that's sort of a dramatic approach in that scenario, it will breach the 15 levels and it will remain above the 15 levels, because that's the kind of scenario where the dollar index would go a lot stronger. You will have a very negative impact on emerging markets, an outflow of a lot of money out of the emerging market space into the Americas, and that would breach the 15, stay above the 15 for a considerable amount of time.
To what extent does local data have any bearing on the local unit, at the mercy of international news?
Not going to say that nothing that happens domestically is not important, but I have often said that we are exposed, due to an open economy, due to being part of the international markets, exposed to international trade. We are sort of at the vulnerability of what happens internationally, specifically again with the dollar, to the extent of about 70% of our flows.
Dollar weakened to 1476 level on the announcement when we saw the cabinet reshuffle here in currently tracking around about 1474 levels, so still in that arena. Your thoughts on the change in the finance ministry? We have seen that Minister Godongwana is going to have very little change from the policies set by Minister Mboweni. But again, the finance ministry does have a bearing on the sentiment and investor sentiment around our currency. What are your thoughts on this scenario, Andre?
It's quite late in the financial year for the new finance minister to change the budget. It's through Parliament, it's accepted. Very little change is expected. He's going to run the budget down. The big change that can be expected, and at this point in time, he's really vocally said that there will be minimal change. So big change will only come in, and speculations surrounding that towards the budget speech of next year. So I don't expect any fireworks at all. But Mr. Ramaphosa had said, watch this space. And in terms of the Treasury and a new finance ministry, when we get closer to the budget next year, watch this space. I think that's where we could see some changes. But I think at the end of the day, it's most probably a good thing that we have a new Minister of Finance. I think Mr. Mboweni had sort of lost a little bit of interest. He became a bit dated with his, and I don't want to be nasty, but with his recipes in his cooking classes on Twitter. And he had vocally always said that he does not want to be in that position anymore. Now, when somebody doesn't want to be in a position anymore, then I don't think that the position actually gets the attention that it should be getting. So I think it was time for a change. And I think in terms of what was available, Mr. Godongwana is actually quite a good choice. He's made good vocal sounds at the beginning of the year during one of the khotlas of the ANC. So let's see how this plays out, but I think it's a good thing that he's there.
Discussing the and the impact that this is having on economies globally. Of course, we see that international sentiment coming to the fore. Are we going to look at another series of lockdowns globally? It's something that's firmly on your radar screen when you look at the risk factor, risk on, in terms of how that is going to buffer or risk off, how that will buffer the local unit. What are your sentiments on that front?
Well, we just have to look at the oil price. Oil price slightly below the 70, and the reason behind that is concern about demand for fuel, demand for oil, as COVID-19 plays a little bit havoc throughout the world with economies as well. So I do not think that we'll go into serious level 5 type lockdowns. We might see smaller lockdowns in between. Certain countries certainly a lot more strict, and I'm referring to Australia, New Zealand, etc. Those very, very strict and very, very quick to react. When I look at the Europeans and I look at the Americas, I don't think we're in for serious kind of level 5 lockdowns. Their vaccination rates are fairly high. And I think the one that more and more starts playing out is how does the hospitals look and how does the death rates look? And that's reasonable at this stage. Hence, I don't think we'll go into serious lockdowns. Obviously, in South Africa, that's a bit of a negative situation at the moment. Our vaccination rate's still relatively low last week, and I think a lot of our viewers and listeners would be aware of the controversial videos that was spread around the country and people looking at that. And that has set us back a little bit because it puts people more on the back foot of actually going into the vaccination centers and getting vaccinated. But once again, I think we're through our winter season for now, or the worst of it. One or two provinces, referring to Western Cape and KwaZulu-Natal, still firmly in the grip of a third wave, but I think that would soon also dissipate to lower levels of infection rates. So also here, I don't think our lockdowns would continue indefinitely going forward. So still bodes well for economic growth.
To what extent is any potential rand weakness countered by the commodity strength that prevails and that has been very good for South Africa across the In other words, is that a buffer commodity strength to potential rand weakness going forward?
Well, we flattened out a little bit. The commodity strength was specifically in the beginning of the year a very big factor. Since then, prices have flattened out a little bit. Slightly lower demand because of COVID-19 concerns, etc., all over the world, especially out of China. But it was expected. Nothing can continue at the same path of growth as it did in the beginning of the year. But it's still at high levels. It's still a commodity boom, just at slightly flattened out levels, but still benefiting the country hugely. As we go into the end of the third and fourth quarter, we must remember that that's also very good periods for our agricultural exports. And just yesterday, I've read about the fantastic maize crop that's expected. And it's expected that the export levels of agricultural products in the third and fourth quarter would actually outstrip the exports of the 2020 year. So that would aid what we little bit lose on the commodity side. That would sort of bode well for that. So I still foresee fantastic trade balance figures, good surplus figures, and terms of trade for South Africa is still very much on the up and on the positive, aiding the currency at this stage.
And Andre, the rise that we saw July here in South Africa, has that worked its way through the system already, sentiment perspective, and the impact on unit?
I think it's expected that our growth figures for the quarters would be, for the second quarter and also the third quarter, would be slightly lower than what was expected. And I think that's kind of built into currency and forecasts, etc. So I don't think that when the figures actually gets released as we go forward, it would have a further dramatic negative impact unless it is a lot worse than what was expected. But I do not foresee that. Similarly, as I do not foresee that the FOMC is going to give us a shock, hence me saying that in the short term we stay within a trading range 1450, 1490, very happy medium at this stage.
Well, we'll take that trading range 1450 to 1490 dollar rand. Andre Cilliers, Treasury One, thank you so much for joining us. I'm Ron Nielsen for